because we did this last time during the lockdowns
Correct.
over Zoom. It was a very popular show. It was a very popular show. It was very good for us crazy Bitcoin people to hear about the environment, the macro environment, somebody who's more experienced, been doing this a long time. I think we sometimes are perhaps a bit naive in our outlook. I certainly am. And it was very useful to hear from you. But since we did that, the world's got a lot more crazy. And the economy seems to be wherever you are, whether you're in the UK, whether you're here in the US. We're facing levels of inflation I've never experienced in my adult life. And I'm also seeing even worse conditions in places like Sri Lanka, and we've seen in Lebanon. So there's a lot going on. There's a lot of people very nervous. And I guess today I'm going to look to you for how you see things.
So I don't know if we got into it on the last time we spoke, but we were concerned about inflation, and we were early on recognizing that it was a problem. And it's really a function of the supply, and it goes back probably 35, 40 years of underinvestment in various commodities, and particularly oil and gas. And I guess it got kicked into high gear around the year 2014. And the problem is that the demand continues to grow, but the supply is not there to meet the demand. And the correcting mechanism is the price, and that's what you're going to see. And governments around the world are seeming to double down, i.e., let's destroy the supply, but not find a way to basically lessen the demand. So you're going to see, in my opinion, in our opinion, you're going to see higher prices even from here.
Have you experienced any similar times where this has happened before?
I guess the 1970s, but this is completely different. This is really, there was much more of an abundance. There was a lot less pushback from trying to get refining plants up, mining facilities up, et cetera. So here there's a real concerted effort by governments around the world to prevent that from happening, and the demand continues to grow for those. So it's worse than the 1970s, or is likely to be worse than the 1970s.
And I guess with energy, we would all love a good continual supply of energy, whether it's for fueling your car or heating your home. But naturally, I expect energy markets have their own bull and bear markets, which sees the investment in finding new sources of energy, whether that is building out power plants, building out nuclear facilities, whether it's finding new sources of oil and gas. But the problem with responding to supply and demand is that it takes a long time to build out this infrastructure.
Correct. So even if we started today and said we're going to start building out this additional capacity, it will take 5 to 10 years minimum. But we're not starting today, so that's why it's likely to get worse before it gets better.
And why was there so much underinvestment?
Variety of reasons. It's a boom and bust cycle. There's governments around the world don't want it. The returns on capital weren't particularly attractive, so investors started pulling money away. A variety of reasons, but most recently, it's been the governments around the world preventing that, and they just don't want refineries. I think there's only been one refinery built here in the United States since 1977, and I think at least 6 have shut down.
Is that due to concerns regarding global warming, climate change, and it's not politically desirable to build out these kind of facilities?
That most recently, that's definitely been the fundamental reason.
Yeah. See, we were, people won't know, but obviously we were discussing my interview with Alex Epstein before this. And for some people, Alex is, he's not palatable because he has a view that we should be burning more fossil fuels. And that's really important for humans to flourish and productivity. And you can certainly see a side of his argument, which is entirely valid here.
Yeah, well, the consumption of energy typically is accompanied with the rise in standard of living around the world. And there's, 3+ billion people that would love to live on a much higher standard of living. And the only way for them to do that is to consume more energy. So you have to, I think his argument really has some validity in the sense that he's saying you have to weigh the detriments with the benefits. And there's a lot of benefits to basically more consumption of energy. Now, obviously, I think everybody, unless you're a psychopath, wants to have a cleaner world. And I think people are recognizing that perhaps there is climate change that is happening as a result of the burning of fossil fuels, et cetera. But the problem is you can't go from this, quote, renewable, even though there's no such thing as renewable energy, without basically a proper backup. And we don't have that. So they're trying to kill the supply, but they're not killing the demand. And that's a real problem. And the correcting mechanism is the price.
And how much has the war in Ukraine and Russia compounded this issue?
It just accelerated it months.
Oh, is that all it is?
That's all it is. That's all it is. This was coming whether that occurred or not. That this just crystallized it and pushed it up 6-7 months.
Oh, wow. So these predictions I've seen of, say, $300 for a barrel of oil, is that highly possible?
Absolutely highly possible. Possible for two reasons. One, supply and demand. And two, you keep debasing your currency. You want to get down to the base layer of what's important to run a society, and you're going to find it's oil and gas. So if there's a lack of supply, people with the money will pay that price. So it wouldn't shock me, and it wouldn't shock me if it happened in the not too distant future.
Well, what role does someone like OPEC play in this? Because they have the ability to increase production, but they also benefit from the higher prices. Do they play a role in this? Do they have an incentive?
So, nobody really can get behind the curtain in the way that really you can determine whether or not they truly have the capacity. So they've been underproducing for the last year plus, and it's not clear that they actually can turn on the spigots and get it going that much greater than it currently is. I think Saudi Arabia probably could do some, but my guess is that basically they're operating at capacity now, and that's really the problem. If the United States probably could increase production, but the current administration really seems to be against that. So, in addition to that, the valuations for a lot of the oil and gas companies are so low. Their best use of capital really is to pay down their debt, buy back their shares, and I think that's what their shareholders are demanding. So unless those stocks get re-rated in the market, they're not going to go out and explore for more oil and gas. Their best investment is sitting right in front of them in their own stock.
Interesting, there's another potential compounding effect in the UK specifically. I'm not sure if you've seen this, but we're facing much higher energy prices. My electricity and gas bills have essentially tripled, quadrupled over the last year. There's a lot of people who are in fuel poverty now and cannot afford to pay their bills, and the government is looking to fund essentially a stimulus check to cover energy payments through a windfall tax on energy companies to the tune of, was it 15 billion, did we look?
I can't remember the
But it's a number. It's a very high number. But by taking that money off the energy companies, that's actually going to take away from them being able to invest further in energy.
It completely decentralizes them. It will basically compound the problem. So it's definitely not a solution. Longer term, it's just creating more of a problem.
Yeah, but is a real wake-up call to me, Peter, in realizing how intrinsic energy prices are, or commodity prices are, to the function of the economy. It just had never crossed my mind. I had made a show the other day. Do you know Lynn Alden?
I do.
Yeah, so I made a show with her the other day, and I mentioned that a news story came out with regards to swimming pools in the UK, and they're facing a crisis because one of their biggest costs is heating the pools. And so they're facing three choices. Do they close? Do they reduce their opening times? Or do they keep the pools cooler? Actually, there's a fourth one where they have less staff. But it never, obviously they could also raise their price. But that itself, to me, is just one example of probably tens of thousands whereby higher energy prices have a massive hit on how businesses function.
Absolutely. You can't function without basically crude oil, and there's something like 6,500 different products that use crude as a base. So all the plastics, you want to hit a golf ball, the asphalt roads that you drive on, et cetera, it's vital to the global economy. And I don't think people have an appreciation for that. So they want to move away from it. You can't just move away from it. You spent the last 160 years building an infrastructure that's based on hydrocarbons. You don't move away from it in 2 years or 5 years or 10 years. It's going to take a long period of time. That's the real problem. And the policies currently in place, largely in the developed world, is they're moving away from it, and they're, trying to limit the supply of it coming out onto the market, and the demand continues to grow, and the demand's not going away. So that's the real problem.